Alright traders, welcome back to the channel. In today's video, we're putting the 714 method to the test, but this time, we're taking it to Bitcoin. We're going to compare two variations of the strategy. The original version that uses the opening price and the 2 p.m. window, versus my own personal twist that focuses on key support and resistance levels instead. I'll show you both in action, backtest them side by side, and we'll see which one comes out on top. So grab your notebook, hit that like button, and let's get straight into the charts. Now let's jump into the real chart example. Here we're looking at Bitcoin on the 5-minute time frame, and our time zone is UTC+2. First thing we do, as always, is draw a vertical line at exactly 1 p.m. This is our focus point. Now, let's observe how price behaved from 1 p.m. We see that price moved slightly down, then pushed up and dropped again, giving us a bearish structure after 1 p.m. And you know what that means? In the 714 method, when price is bearish from 1 p.m., we're looking for buying opportunities. So, we look to the left side of the chart. What do we have? We spot a clear support zone. And as you can see, price previously rejected from this level. Based on that, we anticipate that price might reject again at this zone. And boom, price respected support and pushed back up, giving us a solid win on this day using my variation of the 714 method. Alright, now let's backtest the same chart, but this time using the original 714 method. The first thing we need to do is add our 2 p.m. vertical line. And just like before, we also place a horizontal line at the opening price of the 1 p.m. candle. Once that's done, our focus shifts completely. We're no longer interested in support or resistance zones. The main character in this version is the opening price line and how price reacts to it. Now, when we look at what happened after 1 p.m., price pushed slightly down and eventually broke above the opening price line and then came back down to retest it. Now, if you've been following the original 714 rules, this retest should have been our cue to enter a buy, expecting price to continue moving upward, right? But instead, price rejected the line, broke below it, and even closed under the opening level. And this is where most traders get trapped. That clean retest setup tempts you to buy, but then price flips, and now you're in a losing trade. And the reason why you might have entered a sell position here is simple. Price broke below our horizontal line cleanly, right here. It looked like a proper break, so naturally, you'd expect a continuation to the downside. Now, someone might say, well, I would have entered with a buy and just held through the drawdown. But let's be real. To survive that kind of movement, you'd need a much larger stop loss, and that's not something most of us are comfortable with. Risk management is key, and realistically, most traders would have been stopped out before the reversal. So in this case, for the original method, this would most likely count as a loss. It's a tough one to navigate, and that's why backtesting these variations is so important. Now let's move on to the next day and see how both variations performed this time around. We're going to follow the same process, break down the structure, compare the reactions, and see which strategy would have given us a better result. First things first, we need that vertical line at exactly 1 p.m. Basic stuff. And as always, this is going to be our main focus point. Now, when we observe price action from 1 p.m., what do we see? A bullish structure, right? So this means we're looking for selling opportunities. Now let's look to the left, and boom, we spot a clean resistance zone. Price previously rejected here, so naturally, we anticipate another rejection at that level. And just like magic, price drops beautifully from that zone, giving us a clean and easy sell setup. Now let's see how the original 714 method performed on this exact same day. First, we go ahead and add our 2 p.m. vertical line. And of course, we mark the opening price at exactly 1 p.m. This horizontal line is now our main focus. Now, when we observe price movement, what do we see? Price pushed up between 1 and 2 p.m., then slightly moved higher before starting to drop to the downside, eventually breaking and closing below our opening price line. Now, once we see this break, what's the next step? In our heads, we already know we look to sell the market, right? So right here we enter sell positions, and boom, price continued dropping beautifully, giving both variations a solid win. Moving on to the next day. First things first, we start by adding our 1 p.m. vertical line, as usual. That's our key focus point. Now, when we observe price movement from 1 p.m., what do we see? Price pushed to the upside, giving us a bullish structure from 1 p.m. So here on the left side, we have a resistance zone. We mark it. As usual, we anticipate price to reject at this level again. Price moved slightly down, but this time, buyers stepped in aggressively, pushing price back to the upside. And as you can see here, our stop loss was hit, taking the first loss for the week. Now let's see how the original 714 method performed on this exact day. First things first, we add the 2 p.m. vertical line, followed by the opening price line at exactly 1 p.m. Now once that's done, we start to observe price after 2 p.m. So what happened? Price pushed to the upside, broke our opening price line, then came back to retest, and boom, reversed back to the upside. Classic 714 method behavior right there. And as you can see, guys, it gave us a clean buying opportunity. So from this, it's pretty clear both variations actually work. You just need to choose the one that best suits your trading style and stick with it. And that brings us to the end of today's backtest. As you've seen, both variations have their strengths and weaknesses. Some days the original 714 method comes out on top, and other days my variation takes the win. At the end of the day, it's not about which one is better. It's about what works best for you and how well you understand and apply it. So make sure you backtest, keep learning, and most importantly, stay consistent. If you enjoyed this video, drop a like, subscribe to the channel, and turn on those notifications so you don't miss any future uploads. Catch you on the next one. Peace out and happy trading.